All right, back to the numbers. The consumer price index remained unchanged last month when compared to September. The index rose 3.2% over last year. Here now to explain what this all means for the consumer and the economy is Jeanna Smialek. She's a Federal Reserve and economy reporter for the New York Times. So, Jeanna, we say unchanged, and then we say that, well, you know, things went up, but it's been going up, but slowly, which is good news. But I need you to break down the numbers and tell consumers, you know, why they should care about this number.
Yeah, so this is a comprehensively very good inflation report from a consumer's perspective, from government officials' perspective, kind of across the board, optimistic. So that headline number that you just mentioned, the one that was unchanged, was increased because it was unchanged. It increased less than what economists had expected last month. They had expected a slight increase. We didn't see any move at all. On a year-over-year basis, so comparing prices this year to prices last year, we saw that 3.2% uptick, which is a little faster than the roughly 2% that we were used to before the pandemic. But it is way slower than the 9% that we were seeing last summer. And so we're really seeing some nice progress in bringing inflation down much closer to sort of a normal pace than what we were experiencing last year. So if this process keeps up, if we keep seeing this kind of slowing, that could be really good news for consumers because it could mean we get back to a pretty normal world where prices are climbing at roughly the pace that we've been sort of used to throughout most people's adult lives.
So we're launching ourselves into the holiday season, though. And I don't know if we ever, you know, typically see kind of like a cyclical blip during the holiday season. But if people decide, hey, it looks like things are holding steady, I'm going to spend like there's no tomorrow. I mean, could that be a problem down the road for us?
Yeah, what has been so interesting this year is we've managed to see this pullback in inflation, even as people do kind of spend like there's no tomorrow. I mean, we all watched the Taylor Swift and Beyonce tours this summer, right? Like people spent like crazy, and it seems like we're shaping up for a pretty strong holiday season as well. So I think this is the real question that economists are grappling with right now. You know, if people are spending like this, if people are really willing to go out and sort of drop quite a bit of money, will companies take advantage of that to charge more? And can inflation continue to moderate in that environment? And so I think that's the next really big question for officials at the Federal Reserve, for officials at the White House. You know, everybody's going to be watching those retail spending numbers this fall and winter.
So, and all these reports are sort of like little tiny snapshots of the economy, and then you kind of try to put it together to make a big picture. So this is the consumer price index, and this includes food, right, and fuel.
Yes, food and fuel are both in that 3.2% number. If you strip those out and just look at the core number, which is what the Fed really watches closely to kind of get a feel of what's going on under the surface, that climbed at 4%. So still a pretty solid slowdown compared to where it previously was. It was at 4.1% a month ago, so even a slowdown from the last month. So overall, very good report here.
Right. And food and fuel's kind of usually pretty volatile, so sometimes it can skew those numbers. But it looks like in this case it hasn't. The producer price index comes out for October, is released tomorrow. How is that going to sort of have an impact, and what can we expect from that?
Yeah, so people watch that for a sign of sort of what's happening a little bit upstream. You know, what is happening to sort of the companies and what are they likely to pass along to consumers in the longer run. That one's supposed to hold relatively steady. It's been kind of cooling in fits and spurts, and that trend is supposed to continue. And so I think that we're expecting sort of an overall pretty benign inflation picture this month. And so I think that is exactly what the Federal Reserve in particular is hoping to see as we head into the end of the year. So, you know, that one's important, maybe not quite as important as this report. I think this report sets us up really well, you know, for the Fed's final meeting of the year. I think the CPI today is going to be the thing we're all paying attention to.
It's a little no news is good news for the economy. I think it's good. Jeanna Smialek, thank you.
Thank you.